Hey traders, Raghee here, and we're going to take a look at Crude and XOM as well as Phillips 66 in this free video. And one of the things that we noticed today was finally a fairly healthy correction in Crude to the upside, as you can see here. And what's really interesting is this level right there, and you can see this series of yellow dots here, here, here. These yellow dots are what's known as simpler propulsion. And propulsion is a tool that mixes a self-correcting exponential moving average with exponential moving average crosses. So one EMA crossing another EMA. And it combines these two into a fairly handy indicator. It's a free indicator we make available to members. And in this case, this is the 813 cross. 813 cross. And so when that happens, it interacts with price in a very specific way. These dots light up, and they light up over where the 13 EMA would be if you kept it on all the time. So rather than turning on and off, because what I want to do is I only want to pay attention to the 13 EMA when I feel it's trending in a way that suggests that I can trust that it will be resistance. And that's when the 8 crosses over. Now some folks want something more aggressive. They might use a 5. There's different ways you can set this up, but I use an 813. And you can see that 813's lit up, and that would be an aggressive short in crude oil, or in the bullish momentum that we had today, you buy puts in crude. So there's a couple ways you can do this. Now this is the first, not the best, and please distinguish between the two. It's the first opportunity. I think there's up to about another 3 zones or layers we can look at. One would be up right up against 58, right up against about 56, and right up against about 55. So this is just the first opportunity to get what I call aggro in short. Now, one thing to also remember is if oil is moving, so are oil stocks. So if I take a look at something like XLE, where Exxon and Chevron are the number 1 and 2 weighted names, now I've got an oil proxy that I can look at. And that's what we're looking at here as well. Is there a better setup in those oil proxies? And so take a look at Exxon here today. Now this is a short we had talked about before in the chat room, and that happened right here. You can see we're getting something very similar again. And I realize that we might take a little bit of heat, which is just a fancy way of saying a little bit of unrealized loss, but we have plenty of time, right? If we go with options, I've got plenty of time. So we've got about 60 days to expiration on these options, and we're looking for that very similar short to occur again. So if crude oil exhausts and heads lower, then I'm also looking for Exxon to do the same. And so let's take a closer look at the setup and the levels that I'm looking at. Now, a couple things that I'll do. I like to put in a few levels with using the volume weighted average price into play. And one place that I'm going to anchor my VWAP is the 23rd of April. So let's do that right now, 23 of April. And another place that I could likely also anchor would be the 30th of April if I wanted to go that route. So you know what, let's just do this here so I can show you one more anchor. So let's also anchor it on the 30th. So I'm choosing the date based upon a pattern I call a minor, high, or low max. All right, so there's a second anchor. And what that does, and let me zoom in just a little bit more, is it creates a zone, as you can see right here. One anchor, 2 anchors, I've got a zone right in here, and you can see what we traded right up into on Exxon. So this is definitely a market that I'm interested in shorting. And then if I take a look at the V-score, which measures the standard deviation between price and the volume weighted average price, take a peek. Where have we peaked before? In this area here. And so if we've actually had plenty of resistance here, and here, and here, and we're reaching that level right now. So you can see we're getting the culmination of some very interesting things. 55 EMA, we're below the 200 EMA, in that VWAP zone right in here, and a V-score that is telling me that this is a good place for the market to head back down. That is a perfect opportunity to buy puts, and we've got the puts in at the 75 strike. All right, so that's something we're doing. Got plenty of time on this too. Playing further dated out. I like a 30-day minimum. Really where I want to be is about 60 to 90 days if I can. 45 can be a good sort of bridge in between it, but that's what I look at with these puts. Crude oil proxy, XOM short, and that is what we're looking at going into the next few weeks. Looking at an expectation for OPEC to keep the production cuts and for crude to head back down, because after all, it is in a downtrend, as is XOM. I'll see you in the next update.